Welcome to the deep dive. Today, we're looking at India's economy, specifically around August 2025.
Right.
And the big theme, really, seems to be this idea of Goldilocks. Not too hot, not too cold.
Exactly. Just right.
Yeah.
And in economics, that means, well, steady growth, but also low inflation, kind of the ideal mix.
Okay, so that's what the data is suggesting.
Yeah, pretty much.
Yeah.
I mean, looking across the recent reports, Press Information Bureau, Reuters, Deloitte, even the OECD, they're all sort of pointing towards this balanced picture for India. It's quite consistent.
So that's our mission for this deep dive, then, to really unpack those reports.
Yeah, exactly. Pull out the key insights, see what's behind the headlines.
Figure out what's really driving things, what the numbers mean, and the challenges, too, of course. Can't ignore those.
Definitely need to cover the challenges.
Yeah.
It's never all perfect.
No. So it's not just, here are the numbers. It's how did India manage to get into this just right zone? And maybe more importantly, can it actually last, especially with everything going on globally?
That's the big question, isn't it? Sustainability.
Right. So hopefully this is your shortcut to getting, properly informed on what's happening with one of the world's really dynamic economies right now.
Let's dive in.
Okay, let's start with the big one, growth. The GDP numbers. India managed 6.5% real GDP growth in the last fiscal year, 24-25.
Yeah, that's a really strong number, especially when you compare it globally.
Absolutely, it stands out. But looking ahead, with global volatility, are institutions like the IMF, the RBI still confident? What's underpinning that?
Well, that's what's interesting. The forecasts for this fiscal year, 25-26, are holding up remarkably well.
Oh, really?
Yeah, the IMF, RBI, Deloitte, Reuters, they're all clustering around, say, 6.3 to 6.5%.
Still very strong then.
Very strong. And that consistency suggests it's maybe not just a temporary bounce. It points towards, some underlying structural resilience in the domestic economy. Less tied to just global swings, perhaps.
So stable growth, even in this environment, that's impressive.
It is stable growth in an unstable world, as you say.
Okay, but the other side of that Goldilocks coin is inflation.
Right.
And the numbers there are, quite striking. Consumer inflation down to around 2.1% in June 2025.
Yeah, lowest since early 2019. It's a significant drop.
What's driving that? Is it just falling energy prices or something more?
It seems to be broader. I mean, core inflation, which takes out the volatile food and energy, that's also been quite subdued. Which suggests, a softening in demand for discretionary items, maybe a general easing of domestic price pressures, not just imported inflation disappearing.
So this low inflation, it must give the Reserve Bank of India, the RBI, a lot more room to maneuver.
Absolutely. Strategic agility, as you put it. That's a huge asset right now.
How have they used that room?
Well, they've already acted. They've cut policy rates cumulatively by 100 basis points, a full percentage point since February.
Wow, okay.
Yeah, so the main policy rate, the repo rate, is down to 5.5%, which means they can afford to perhaps wait and see now. They could pause the cuts or maybe ease even more gradually if the data supports it. It's a comfortable position, relatively speaking. Many central banks don't have that luxury.
Right, still fighting high inflation elsewhere.
Exactly.
Okay, so inflation's low. The central bank feels it has options. How is this playing out in the real economy? You mentioned consumer spending seems healthy.
Yeah, domestic demand seems to be holding up well. Consumer spending is looking pretty robust, both in rural and urban areas, which is good to see.
But there's always a but, isn't there? What about investment, particularly private investment?
That's the slightly weaker spot.
Yeah.
It's definitely lagging behind the government's capital spending push.
Why is that, do we think?
Well, corporate earnings growth hasn't been spectacular. It was around 7.5 to 8%. Positive, yes, but maybe not enough to trigger a big wave of private investment just yet. And it's quite uneven across sectors, too.
Okay. Tell me about that. Which sectors are doing well and which aren't?
Well, the IT and banking sectors seem to be under a bit of pressure, partly due to, weaker demand from the U.S., maybe some margin pressures in banking.
Okay, so global exposure hurting them a bit.
Seems like it. But on the other hand, sectors like automotive infrastructure-related ones, cement, they've shown more strength.
Tied more to domestic demand and that government spending.
Precisely. It reflects that public CapEx push and the relatively healthy consumer demand for things like cars. So it's a mixed bag.
A rebalancing, maybe? Or just different exposures?
Probably a bit of both.
Mm-hmm.
It highlights where the momentum is right now, more domestic, less global, perhaps, If it's that just right idea, again, not everything firing on all cylinders, but enough strength overall.
Okay, let's switch to the external side then. Trade. India hit record exports last fiscal year. What was it? Around 825 billion US dollars.
That's the number, yeah. Pretty remarkable.
And services were a huge part of that.
Almost half. Services exports were nearly 388 billion, with merchandise around 374 billion. Services remain a real powerhouse for India.
Fantastic numbers, but are there clouds on the horizon there? Any trade worries?
There are, potentially. The sources we looked at do mention emerging headwinds, specifically talk of new U.S. tariffs
On what kind of goods?
on certain Indian goods and also potentially affecting oil imports somehow. The details aren't fully clear yet, but it's a risk factor.
And what could the impact be, according to the reports?
Well, the estimates suggest it could trim GDP growth by maybe 0.2 to 0.4 percentage points.
Not insignificant.
No. And it could also, put some pressure on the rupee and the financial markets.
Yeah.
So it's definitely something policymakers will be watching closely. Again, these are potential impacts cited, not definite outcomes.
Right. Need to keep an eye on that. Okay, back to the domestic side. You mentioned government capital expenditure, the CapEx. That's been a key driver, hasn't it?
Absolutely central. And it's set to continue. For this fiscal year, 25-26, government CapEx is projected to grow by another 17%.
17%. That's huge.
It really is. It's funding massive projects. You hear about things like PM Gati Shakti, the National Infrastructure Pipeline.
Right, the big connectivity and infrastructure plans.
Exactly. The idea is that this huge public investment boosts efficiency, logistics, and crucially, eventually crowds in private investment.
That's the key phrase, isn't it? Crowding in. Does it work? Is there concern it might rely too much on government spending?
It's definitely a point of discussion. The policymakers seem confident that this push, combined with deregulation, reforms, making supply chains more resilient, that all this will create the environment for the private sector to step up.
So the aim is to sustain that sort of 7-8% growth longer term.
That seems to be the ambition, yes.
Yeah.
But whether the public spending successfully bridges the gap to sustain private investment, well, that remains to be seen. It's a critical transition.
Okay, let's try and pull this all together. If we summarize the strengths coming out of these reports.
Strengths are clear. India remains the fastest growing major economy. That 6.5% growth is solid and stable.
Inflation under control. Big plus.
Huge plus. Gives the RBI that vital flexibility. Then you've got the strong public investment in infrastructure and resilient exports, especially in services. Those are the core positives.
But then the risks and headwinds section of the report.
Also quite clear. External shocks are top of the list, those potential tariffs, general geopolitical uncertainty.
Okay.
Then weak corporate earnings in some key sectors like IT and banking, as we discussed.
Right.
The lag in private investment and job creation is still a major point. Can't stress that enough.
Yeah, jobs are crucial.
Absolutely. And finally, some sluggishness in certain consumer areas, maybe linked to slower wage growth for some segments. These are things that could, spoil the Goldilocks picture.
So boiling it all down, the overall take seems to be India, mid-2025, is in a pretty stable spot. Balanced growth, low inflation, government spending is disciplined but strong.
It really does sound like that Goldilocks scenario, for now at least.
For now, yes.
Yeah.
The analogy holds up quite well based on the data. Balanced expansion, tame inflation, disciplined public finances. But with clear challenges remaining.
Absolutely. As the sources highlight, the big tasks are still creating enough good jobs, really getting that private investment engine firing properly, and navigating those tricky external risks, like trade tensions.
That transition from government-led to broader private sector growth seems key.
It's the critical next step, really.
So wrapping up, the outlook feels cautiously optimistic. If the global picture doesn't get significantly worse and domestic reforms keep moving.
Then India seems well-placed, yes. Well-placed to maintain that growth leadership position.
Okay, so as we finish this deep dive, lots to think about. But here's a final thought for you, our listener. Given everything we've discussed, this blend of strengths and challenges in India's sort of Goldilocks economy, what single indicator, or maybe what sector, would you track most closely from here on out to really gauge if India is staying on this just right path? Something to ponder.
Interesting question.
Thank you for joining us on this deep dive.